Hello everyone and welcome to this morning's webinar. Thank you for your patience waiting for us to start. As usual, before we start, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Lots and lots of stuff going on that's been going on overnight, that is going on at the moment. But just before we move on to that, can I just for the benefit of perhaps those of you who are coming along for the first time, the webinar is going to be, it's myself, Anna, and my husband David, who is sitting behind me, and we are going to be looking at the markets, the forex markets, through the prism of a volume price analysis, which is a methodology that he and I have been using for the past 20 years. But not just, that's the sort of technical analysis side of things, but we also look at these markets. We draw on what's happening on the fundamental landscape, what's happening in the related markets, and of course what is going on at the moment, the big overriding issue, the medical crisis, the health crisis of the global pandemic that is going on around us. And I think most of us who are attending here today have probably been in some kind of lockdown now for maybe a week, maybe two. David and I are actually on our third week. We were a week ahead of everyone else because our son-in-law became very ill, as did our grandchildren. They're not so ill, and we suspected that that's what they had, and so we kind of all isolated ourselves. It's a very difficult time for very many people around the world, and it's a time that all I can say is it's a situation where we feel completely powerless. We have very little control over what is happening in our lives, and when there is really nothing that we can do, we are at the point now we sort of have to resign ourselves to the situation, make the best of it, do what we can, control what we can in our personal lives, make a routine, just bring some structure to your life. And this, because like everything else, this will pass, but it is not going to be easy. So it's lovely to have you here. It's lovely to have, I know we can't see you, but at least, coming to the webinars, I hope you feel that you're part of a community. And David and I will do our best to help you succeed in a market that, can be tricky, can be difficult. But I know from the feedback that I get from readers of my books, students on our quantum education program, our forex program, users of our indicators that you will see in these sessions. I do know and that if you begin to see the markets in the way that we are going to explain a little way today, you will succeed. You can succeed, and it's never been more important to understand what is going on in the markets, because no one knows what's going to happen in the future, but with the kind of skills that you can get from, as I said, the books, the indicators, the program, they will equip you for life. The markets aren't going anywhere. They may change, new products may come on board, but you can participate and you can make money from it and to protect yourself and your loved ones. So if you've not come across before, if you head over to Amazon, that's where you'll find details of the books. The indicators I mentioned, and I don't know what's happened to my screenshot, so that's pretty pointless. Oh, there it is. Basically, as part of the indicator set, we have also developed some specific tools for the forex market, and quite honestly, the best way to see these is to see them in action. And oh boy, they can give you so much information about what is not only what has happened in the markets, but what is happening now, but more importantly, what is going to be happening next. And my fault, I haven't got my little slides that I was going to do, because what we are also going to look at on the charts, we're going to be looking in more detail on the three Wyckoff laws that are actually mentioned in the books, developed to and explained in great detail on the program. And these are the three laws that help us understand what is happening on the chart at the moment. It gives us a narrative, what has happened, what is happening now, but more importantly, what is going to happen next. And the three laws are as follows, in case you've never heard them before. There is what we call the law of effort and result, the cause and effect, and supply and demand. And each of those laws you can apply to a different phase of price action on the chart, and they are truly extraordinary. Then Richard Wyckoff, in case you don't know, he was a trader, an educator back, I think, in 1933. David, did you write there? Yes, and it's quite ironic that in fact he developed his work and his course at a time coming out of the Great Depression, as it were. The program features a lot about Richard Wyckoff. We've integrated it into our methodology of volume price analysis. It's the principles, the concepts that are in these laws, plus we've added in candles, candle patterns, time, and also very important support and resistance. So that's what we're going to cover, and also look at, as I said, what's been happening. It's been very interesting overnight because we've had some fundamental news out of China. The fundamental news has kind of taken, everyone's kind of ignoring it at the moment because it's so bad. But what's interesting about what happened overnight is this is the sort of the new, we've had March is coming to an end, so we're coming to a new trading week, and in the new trading week we always look at the PMI data. The PMI data tells us basically it's the purchasing managers index, and if you go over to Forex Factory, it's a very important release that always comes at the beginning of every month, and there's a manufacturing one and there's a non-manufacturing one, and these numbers are really important because it tells us what these managers think about the economy and, you know, going forward. Now 50 is the kind of inflection point given what's happened in China since December with the pandemic. This is last month, and you can see here the figures were dreadful, 35 and 29. This is what the forecast is, but look at the numbers that have come in. They are truly extraordinary. That's the most polite thing that you can say about these numbers. Now what happens is the effect on the market is a good number, you know, great, the economy is doing well, everyone should be happy, etc. But some very odd things happened overnight. First of all, any news that comes out of China has an immediate impact on the Australian dollar. And in fact, if I scroll that up, you can see here this is daily FX. It's I think it's part of FXCM, isn't it, David? I don't know. But what they said, which was really, they found it very odd that just before the release, the Australian dollar sold off really heavily. Just before the release came out, and whoosh, the Australian dollar came back. And even the people who write this stuff for daily effects, as they said here, it was odd, it was weird, they couldn't understand it. So that was the sell-off on there, and that's it. But it hasn't actually come back, it hasn't retraced all that. A lot of stuff going on, a lot of comments saying, you know, these numbers from China are about as accurate as the coronavirus numbers that we have been given, you know, by that country. But I have to say, we can go on and on about it and talk about it ad infinitum. We have to work with what we've got. And, you know, if these are the numbers that have come out, the market kind of, you know, holds its nose and reacts accordingly. So until they change the way the numbers are reported, or the PMI no longer has any impact on the markets, we have to work with what we are given. I'm just going to pass over to David while I sort out some other images that I want to show you, and then we will look at the charts.
Thanks, darling, and a very good morning from us. Certainly morning here. It might not be morning where you are, but you're very welcome, and thank you for joining us in these troubled times. If you have any questions, happy to answer them. Please just drop them in the chat box. If they're short questions, if they're longer questions, we will answer them on air. And in case you don't have our email details, you can always contact Anna on her personal email, anna@annacooling.com, or you can get hold of me, David, at quantumtrading.com. So we're always around, and we're always around in the VPA traders, our chat room, private chat room for quantum trading education customers on the program. That's where we all live, and I have to say, it's a wonderful community, very, very helpful students in there, imparting their knowledge, giving freely of their time. It really is, it's humbling in many ways. So we're very grateful. I know we've got 1 or 2 students in the room today, so thank you, as always, for all your contributions. We do appreciate it. I'm going to pass back to Anna, and we will get going. I'm on Ninja on my side, Ninja 8, just sort of hunting around, seeing what's going on. Quite a lot of congestion. There are some moves, but it's quite a lot of congestion at the moment. And also in terms of sentiment too on indices and other risk assets. So we'll see what we can dig out, and as always, generally start with the CSI to see if we can find something to pick up. I'll pass back to Anna, and we will get going.
Obviously, we've got the London Open in 4 minutes time, but you know, we all know what happens at the London Open, all sorts of more shenanigans and traps and what have you. But I just want to start with the hourly CSI, and just to give us a global picture of what the individual currencies are doing, and looking at the matrix on the hour to see which of the pairs have been moving, which of them are, you know, at an extreme, as it were, what the values are. And we can see here immediately, I've just highlighted the British pound because it's the pound Aussie that I've been sitting on quite patiently. David, I think, have you got something with the New Zealand, David? Because that's and we can see here, this is the move higher in the Aussie as a result of partly as a result of the Chinese news. We can see it is still moving higher. What's you know, what is its counterpart down at the bottom? Well, we've got the Canadian, we've got the euro still moving lower. So obviously there's been some sort of move in the euro dollar. The pound here has not been doing you know, quite so much. The yen is turning up, which tells me immediately that positive, you know, the overall market sentiment may be sort of wavering a little bit, and not as positive as it was yesterday, and as we saw reflected in equities and the indices going up. But it gives me a snapshot. This is the hourly chart, and I use the hourly. You can use the 30-minute, but I use the hourly because it gives me enough information for what has happened in the previous session, and possibly what is being set up, if you like, in the session to follow, and also because I'm in the faster timeframes anyway. But just to give you an idea, this is very different to what yesterday morning looked like. And I have here, this was something I did. Here we are. This is that I used on my Facebook page, and you can see here the difference. And this indicator that we developed, yes, it gives you this, on one level, it gives you this information of what the currencies are doing. It tells you where where the money has been flowing into, and it's obviously clearly been flowing into the Aussie this morning, been flowing into the New Zealand. Now it looks like there's outflows there, and going out of the yen. Now it's going back in. But look at how the lines are, you know, the divergence that we can see here. So that is telling us that there have been trades, and with divergence, with things at an extreme, we know that we are going to possibly get some reversals in the faster timeframes. This market is a market of mean reversion. It's an oscillating market. So you have these sine waves, and the sine waves, you know, you will get bigger sine. You know, obviously the slower the time frame, the bigger the sine wave. The faster the time frame, the more oscillations you will get. And as traders, that is what we are looking for. We look at these oscillations. If you're a reversal trader, if you characterize yourself as a reversal trader, you like to get in when you see one of these turning points. Well, you would obviously look at, you know, what is the currency doing at the top and at the bottom, and what the matrix does. The other indicator that I've put on this chart, you don't have to, you can have it on a separate chart. Here, it tells us how the pairs stack up, if you like, on a ranking ladder, and you can see the extremes. The numbers that you see at the top and the bottom also give us an indication of whether at the moment they're fairly equal. You've got plus 68, you've got minus 63. So there's a kind of balance between the buying and the selling in these two pairs. Sometimes you get very extreme numbers. So that number there I've seen on the hour, it's been up to 200 and something. That tells us that it has been a very, very extreme move. What we're doing with this indicator, we've done it for TradeStation, is that we're coming up with a way of being able to record whether that value that you see here is that a high value, a medium value, or a low value. And because as much information that you can get about the strength of the move, the momentum behind the move, gives you an insight as to whether possibly that move is likely to roll over. At the moment, you know, 63 from experience, it's kind of neither here nor there, is it, David? It's yes, there's been a good move, but I know that number can be much higher. It all can also be much lower. But just go back to my little photo, my little screenshot here from yesterday. This was about this time this morning. This is what really you don't want to see. You open up your machine, you maybe have the hourly, and you see this, and sometimes your heart can sink because you think, oh my goodness, there's nothing going on at the moment. But you have to be a little patient, because the one I actually selected and focused on in the morning was the pound Canadian, and in fact it turned out to be a really, really nice trade. The narrative for the trade is actually on, as I said, my Facebook page, because I could see all this going on. In fact, it was also the strongest pair on the hour, and you think, well, are you not waiting for perhaps a reversal? And it was, as you can see here, 64 was about the same values that we have today. Yes, there were some pullbacks in the faster time frames, but look at where the lines were in respect to, they're not extremes here. We just put this 18 and 20 as a kind of visual clue as to when it approaches these areas, you are likely to get a reversal. Doesn't always happen, because things can stay oversold, overbought here, as we see with the pound before it actually rolled over. So, you know, seeing that, don't let your heart sink, because you think, oh my goodness, you know, they're going nowhere. The trade did develop, and it came to an end, in fact, just before the US Open, which you will often get as well. So you'll get a nice move starting maybe before London. You'll get a bit of a pullback because all sorts of shenanigans go on at the London Open. Then sometimes, you know, if the trend then reestablishes itself, and you can, you know, by looking at the chart and using one of Wyckoff's laws, you will know whether it's a reversal or a continuation of trend, and, you know, it'll go. And it carried on, in a sort of quite a measured way, very different to the market conditions that we've been seeing over these last few weeks. I think I had a comment from one of our students who said, you know, everything is so slow, and I said, well, it isn't slow, it's turning back to normal. We have been spoiled with these huge moves in these last few weeks. This is much more typical of the kind of market that you know, we have in forex and in most markets. But the difference today, as I said, we've had much more, there's been much more divergence. There's been stronger moves, as we can see, in the currencies and currency pairs. So that immediately gives us a mental picture of what the market is doing at this particular time. Now, as a trader, you will either have a personal set of pairs that you like to trade, or, you know, you will say, well, you look at that, you say, yeah, I've come to work for the day. What is there to trade? I'll basically trade anything that's moving. And that's where an indicator like this will come in so useful, because if you are focused on some pairs, you will look at your pair and you think, you know, nothing's happening. I've got to be patient. I've got to wait. You just sit and wait. There will be stuff going on elsewhere, but, you know, you're focused on your pairs. You know your pairs. You know you've got your tactics for those pairs. You will sit, or if you're like us, you're much more not indiscriminate. You're quite happy to pick other pairs, and, you know, you basically look and say, yeah, I think there's a nice move likely to set up in that pair. I'll go and have a look over there. As I said, one of my pairs is, let me just shut that down. Yep, yes, Euro Aussie is one, but I'm actually looking at the Euro, at the pound Aussie. It's one that I write about a lot. It's one that I trade a lot, and the reason but again, I've got to be patient. I've got to be patient. There could be waiting for potentially a reversal based on the fact that the Aussie is as I said, overbought on the hourly. What are the charts telling me for this particular pair? And here I've got my Ninja Trader with 4 time frames. I've got the 3 minute, the 10 minute, the 30 and the 60 from my MT5 platform, which I've got here. Let me just move these out of the way. I've actually got my renko, which is set at 3 minutes. Now the renko is telling me this is the congestion that this pair is in. This is the move lower. I've missed this move. This was in Asia, but since then it's been chopping about, as we can see here, and how that's reflected on the time chart is here. This is the volume point of control. What am I waiting for? Well, David is a reversal trader in the sense that he likes extremes. I tend to use these areas of congestion much more. I use the volume point of control, and basically what I'm waiting for is I'm waiting for a clear break away from this congestion. It's in congestion on 3. It's almost at the congestion on 10. It's not quite there. So possibly that tells me that is what is, if I'm correct in my reading of this pair, this is where I think this pair could be heading. But the actual entry for any trade on this is really going to be based on, it's got to break away from this resistance area here. I've got to see a nice set of blue trend dots. The trend monitor has got to be a bright blue and consistently bright blue. You can see here all this choppiness that we've had here, and between using the renko and using the time-based chart at 3 minutes here, what I need to see, I've also had London. I've also had a lot of choppiness because of London. What have we got? There's a lot of buying going under this candle. We've got a doji candle here. This looks like it's going higher, and I'm waiting for. It's a balance between waiting for the usual volatility that happens at London to kind of settle down a bit, so I'm not trapped by the London Open, waiting to see what the renko does, looking at the CSI as well, my other tools, all in all just waiting to see if I can take a low risk, reasonably profitable trade. Don't use the fixed risk and reward. That's not how we approach the market, because to be honest, who's to say the market is going to give you 3 times your risk, 4 times your risk, and saying that you can somehow draw it on a chart in some kind of geometry? Well, fine, if you want to follow. Pardon? Well, I know David's got stronger opinions than I have on that. I'm a little bit more, a little bit more measured in my criticism. I've also got the hourly chart here. If you remember the CSI, I've got here. I've already seen this pair here. There's been buying coming under this candle. There's also been a little bit of weakness. Looks like it wants to move higher. Let me just see on the renko. Let's see what's happening here. Yeah, and also when this renko spikes like this, you've got the spike at the top, it tells us there's a bit of momentum coming in the market. This is actually set at 3 pips. It's a fixed value. You can set it at the ATR, and as you can see here, it picks up the momentum. This is 3 pips. So this brick of 3 pips will go through. Sometimes it can take 5 minutes to go through. Other times it can take seconds, because it's also a measure of momentum. So I'm going to keep an eye on that. That's my trade for the session. I'll just move that over. There we are. Let's move down back to my 3 minute chart here, a 10 minute, and see what happens. But it's quite volatile, as we can see. We've got some wicks to the candle. What will confirm this is this down here. This moves higher, and there's a decent amount of volume on there. There's a chance that will actually, well, the chance it will definitely go higher. So we have Wyckoff's second law, cause and effect, we are looking at effort versus reward. We're not at supply and demand. That law really applies to reversals. Right, I'll pass over to David because I think you've got the Euro Aussie, haven't you, David? Yeah.